Bismillahirrahmanirrahim. Assalamu alaikum. I am again starting another video for chapter partnership formation to help you out in the solution of the question and to review your lectures again. I'm your course instructor, Ismaira Mahmood. Here are the two books which I have recommended you. I again discuss the syllabus in the pattern as per board examination, and this is your board exam paper pattern. Now I am proceeding towards the today's lecture, that is your chapter partnership formation. This is your exam question number 14 on book page number 108. I am talking about the third edition of the Petiwala. On this question, we have on 1st August 2015, Tariq and Wahid agreed to form a partnership firm with the name of TW Construction Company. Here, the name of the firm is TW Construction Company, and the date is mentioned August 1st, 2015. As I told you that when you are starting the question, you must underline the name of the firm, the amount of the capital they have invested. Here we have the data for Mr. Tariq Partnership. Invest cash 200,000, building cost 400,000 with accumulated depreciation of 120 and an agreed value 300,000. As in the previous lecture I have discussed with you, then when we have the two values of the same nature of account, like same account, building costing 400, accumulated depreciation 120 and agreed at 300,000, it means you have the value of the building 400,000 also and 300,000 also. But here you have to ignore the value the previously recorded and you have to only consider the agreed values. What we have done before, we have used the tool and we cut it down the previously values, this one and this one. We have to cut these two values, and for the building we only record 300,000, which is the agreed value. This is the main strategical part of this question, that we have to only focus the realizable value and the agreed values. Mr. Wahid invests furniture 120,000, building costing 80,000 and sufficient cash to make his capital equal to that of Tariq. It means again the sufficient cash formula we have to apply over here, the total capital of the partner minus the given assets. Required, prepare journal entries of the above investment. Here the two requirements which is given. First of all, you have to prepare the journal, and second you have to prepare the initial balance sheet on 1st August. I proceed. Here, the point of remember is the adjustment of Mr. Tariq, that we have to focus on agreed value. I'm moving my cursor. Building cost 400,000, accumulated depreciation 120,000. We have to ignore these two values, cut with pencil, and you only have to focus the agreed value of the building. That is your 300,000. Another adjustment which is given about Mr. Wahid, there's sufficient cash, that we have to calculate the amount of cash. We don't know what is this amount. It is sufficient. What will be the formula? Total capital of the partner minus the given assets of the partner. Now the working, how we have to do this? Building 400,000, accumulated depreciation 120 and agreed value of building 300,000. We need to record this one. Now to calculate the capital of Mr. Tariq, what we have to do, the cash is 200,000 which is given, and building 300,000 which is agreed value. The total capital of Mr. Tariq now become 500,000. Now adjustment for Mr. Wahid, furniture is 120, building is 80,000. It is given in the question, and he invested the sufficient cash. We don't know the value sufficient cash. We have to calculate over here. As we come to know that Mr. Wahid is having the same amount of capital as Mr. Tariq. So Tariq's capital is 500,000. Simultaneously, the Wahid capital will also be 500,000. Now they both become the equal partners. Their ratio is 1:1. Therefore, the sufficient cash formula, total capital minus given assets, now it can be applied. How the application appear? The sufficient cash minus total capital minus given assets. The total capital is 500,000, which is the Tariq's capital 500,000. It means same capital of Wahid. We will minus this 200,000. How this value will become? By adding these two values, which is already given assets 120,000 and 80,000. that is your 200,000, and we get the value of sufficient cash of Mr. Wahid. This is the requirement as per examination, that you have to find the investment of each partner and prepare initial balance sheet. We have calculated the investment, that is your 500,000 capital of Mr. Wahid also and Mr. Tariq also. This will be your journal entry. Cash 200,000, building agreed value we consider, that is your 300,000, and Tariq's capital is 500,000. This is the strategical part of this question. Now for another journal entry, Mr. Wahid, the sufficient cash is the strategical part. We don't know the value of Mr. Wahid cash. How we have done, 500,000 is the total capital. We subtracted the given assets, that is 120,000 and 80,000. Now the missing value or the balancing figure of sufficient cash will be 300,000. So this is the strategical part in which we have calculated the two things. One is the building agreed value we consider. Another thing, we don't know the sufficient cash, and we applied the formula, and here we have find out the sufficient cash value, the total capital minus given assets. And here is the calculation also. Again, it is mentioned as a working. For the examination, you have to show this as a working. So this is your complete journal entry. Now we have to proceed towards the second part of problem number 3, that we have to prepare the balance sheet also. So balance sheet of this question, exam question number 14, is same as we have done in the previous question, and I will discuss the balance sheet again. Assets is your debit side, equities as your credited side. Thank you so much for watching this video, and if you have a few questions regarding this video, you can ask me. Thank you so much. Hope this video will helpful for you.